Here's our part 5 video for chapter number 2, where let's talk about Social Security benefits being taxable. The general rule is that Social Security benefits are tax-free or excludable. But there are certain situations, especially if the taxpayer has other sources of income beyond Social Security benefits, and they accumulate to maybe $10,000 or $20,000 worth, then this Social Security benefit starts to become partially taxable. So let's take a look at the rule here, the general rule. Again, the general rule is Social Security benefits are tax-free. But if the other income of the taxpayer, here called modified AGI, to which we add half of the Social Security benefits, and the total starts to exceed these base amounts here based upon the taxpayer's filing status, then the excess Social Security amount, possibly half of it, will be taxable. And if the amount of income even surpasses this maybe by another $9,000 or $12,000, then the Social Security benefits up to 85%, this is the maximum, could be taxable. So if we take a look at the tax form, the 1040 form, down in line 6, where we report Social Security, here in box A, 6A, would be the total Social Security benefits received by our taxpayer for the year. Then we may need to go through a calculation to figure out how much of it is taxable here in the right-hand column, adding it to the other income subject to tax to get a total gross income. So there's a formula, there's a worksheet to determine how much of this is going to be taxable. And all of it will depend upon the other income of the taxpayer, this other income, including tax-free interest back up here in box 2A that we'll talk about in our next video. So let's take a look at that worksheet. This worksheet to calculate how much of the Social Security benefits are taxable. So the first step is to fill in the amount of Social Security benefits the taxpayer receives during the year, reported to the taxpayer on this form called a SSA 1099, here box 5. So here's an example of a SSA 1099. It's a folded up long sheet of paper. Sometimes there's a color, pink color kind of tinged into this background here. But if we zoom in, this is an old version, but the format hasn't changed over the years. Yeah, SSA 1099. And here's that box number 5, the benefits the taxpayer has received during the year. There may be some calculations down here to figure out how they got this box number 5 amount. So we would report this on the worksheet, and box 6A on the 1040 form. If you have income taxes withheld, make sure you pick this up and enter it on your tax return. So let's go back to the worksheet. We're going to take half of that benefits, and we're going to add in the other income of the taxpayer, including probably this temporary adjustment for the year 2020 where we had been able to exclude unemployment pay, unemployment compensation. So we're kind of adding that back in. And then all the other income of the taxpayer here totaled up on the 1040 form and maybe on the schedule, supplemental schedule number 1. Okay, so you're adding back all this income and half of the Social Security. And if the total, let's see, the total, is this the total here? I guess this is the total, exceeds a certain dollar amount, like this $32,000 for married filing joint, or everybody else exceeds $25,000, then up to half of the benefits here, or same as this number, could be taxable. But if the total income starts to even exceed more than these base amounts here by maybe 12 or 9,000, again, based upon the taxpayer filing status, then up to 85% of the Social Security benefits could be taxable. Again, generally the Social Security benefits are tax-free, then possibly up to one half of the benefits is taxable, then probably up to 85. That's the maximum amount that could be taxable. Okay, so we go through this worksheet, and you gotta have your 1040 form because you're plugging in numbers from that 1040 form to come out eventually to the bottom here of how much of the benefits are taxable. That's going to be reported here in box 6B. Again, the general rule is if your income is low and the only thing you receive is Social Security benefits, this will be zero. Okay? And if you have little bit income, you're still below those base amounts, this will be zero. But if all your other income is moderate or high, then up to, let me emphasize that, up to 85% of the gross Social Security benefits, and you can use this as a check for moderate or high income. You multiply this by 85%, and you should get the amount of taxable. Most times we let the computer do all these calculations, but if you see a dollar amount here that's maybe not 85%, you probably want to go back and take a look at the worksheet that the computer has printed out, making sure all the correct amounts have been entered. Definitely, if it's done manually, you want to redo the calculation, double check the calculations here. Not the most logical calculation, but you gotta go through the worksheet or have the computer go through the worksheet to determine whether if any of the Social Security benefits here are going to be taxable and added to the other income of the taxpayer. Okay, let's stop here and go ahead and continue into the next video where we talk about this line here, this interest income.